Hey everybody, Trader Dave here. I wanted to give you a really quick tip on how to use floor pivots because if you're not using them in your trading, you absolutely need to start. And let me tell you why. All the pros are using this. All the algorithms that you see in the market that make things go flying up and flying down are using it. So it's something that you really need to use. And there might be times you're in a trade and you say, this thing's going to the moon, and all of a sudden it just stops in the middle of nowhere at some random spot. Well, it's not random. Let me show you what I'm talking about. So this is a 5-minute chart of the S&P 500 futures continuous contract. Let me shrink this up a little bit and show you what I'm talking about. These are called floor pivot lines. And I'll show you here in a second how it's calculated. It's pretty complicated, but that's one great thing about computer software. So let's go ahead and take a look at that formula here. So the pivot formula is something that's always continuously calculated. So for instance, the floor pivot itself is the previous day's high plus the previous day's low plus the previous day's close divided by 3. And then R1 is the first resistance point you might see within the market, which is today's pivot point value times 2 minus the low from yesterday. And then the first support area is that same value minus the high from yesterday. So you can do this for the first resistance and first support point, the second resistance, second support point, third, fourth as well, and then you kind of come out with this. So the purple line here that I have is where the floor pivot is, and then right here is where R1 is. So that's that floor pivot times 2 minus the low, and then you can see R2, which is also calculated up there as well. But the point is that these are very important spots, and I've actually put dashed lines in the middle because there's actually something called floor pivots and midlines, and these are the midlines between like R1 and R2 and the floor pivot and R1 over here. And what I'm going to show you is that at the market open this morning on September 30th, it was obviously up. So here's a big gap opening right here, but you can see that everything stopped right here at R2 at around the 1903.60 level. It's probably 75 just because the E-minis trade in quarters, and then it kind of just stayed there as a ceiling. Now let's take a little bit further look here. We'll put an ellipse around this so that we can take a look at this. And then we'll change the time frame. So this is 5 minutes, and you see it bounces off there a couple of times, but let's see what's really going on here. We'll change the interval to like 1 minute, and then we'll see what happened at the beginning here. So there's our ellipse again, and you can see that this thing banged off there several times, not only in this time frame, but it got close to here. And actually this actually failed right there, which means that this move back up from here to here wasn't exactly as strong. And you can also see that there's a lot of indecision right in here in regards to the second resistance level. It didn't actually go to the second midline up to R3. It just kind of stayed here like a magnet. So this to me is a lot of indecision, not only in the market, but it could be the computer algorithms that are going back and forth and saying, you know, we're going to buy up here, we're going to buy it down here, and we're going to sell up here. We're going to buy down here, we're going to sell up here. And it's going to be in a very tight range. As we go through the day a little bit more, oh, it bounced a little bit, sorry about that. But as you can see, as we go through the day a little bit more, it stayed as a ceiling right there. And then this is the midline, so you can see that the midline actually played an important role in the day's trading as well. So this is another indecision point. You can see indecision up here, shows some weakness, comes down. Here's some indecision right in here, and then it doesn't go up, so it decides to go down. And we'll go back out here a little bit further towards the end of the day. You can see that it actually did go from the half line down a little bit, came back up, and now it bounced off of the R1 line. So you can see these things are actually pulling the prices like a magnet. It's quite amazing how these things just seem to stop on these little dimes, as you can call it. So, you know, put a little thing right there. So it stopped right there, stopped right there, acted as a floor right there, acted as a ceiling right there, and so forth. So obviously this is not a coincidence. This is something that the major players are looking at all the time, and they're making decisions on that. So let's say that you wanted to know where a good price to get out could be. Well, if you were able to get in here, I doubt that anybody's good enough to, I know I'm not good enough to get in here at the exact bottom here, but I might have gotten in here on this nice green bar right there. Well, where do you want to get out? Well, obviously, if you know that there's overhead resistance up here, then that'd be a great place to get out. And actually, if you did get out up here, you would have almost gotten out at the top of that swing. So these are very important levels to watch. So if you're not using floor pivots, you definitely should. This is Trader Dave for TradeHacking.com. Have a nice day.